Having compared all of the investing and trading platforms and apps out there, I'm going to tell you which could be the best one for you. Now, I'm not going to bore you to death with a list of features and costs, and we provide all of that information on the Money to the Masses website. In fact, you can find links to all of those reviews in the description of this show. Also, most apps out there have offers when you sign up and use them, and they include some very generous cashback offers. And we are continually updating a list of all of the best offers out there. So we put a link to that in the notes as well. So make sure you check that out before you sign up to any of the platforms that I mentioned. So instead of listing all of the features and costs, what I'm going to do is give you a range of scenarios and investor types, which hopefully cover most people, and then the apps I think you should consider for each of those scenarios and why. But before I do that, I want to give you a quick checklist of the things you should be thinking about when you pick an investment app or trading platform. Now, you'll hear me saying investing or trading app, and technically they can be one and the same thing. Really, they are just investing platforms, and those investment platforms suit different people. Some people are just basic investors. They want to maybe have a portfolio of funds that picked by a professional manager, so that's more simple investing. And there are people who want to regularly buy and sell shares, so they trade. So that's probably the difference between an investing app and a trading app. But really, there isn't much. They're all platforms. So I'm going to cover all of that on this particular show. So a warning before I carry on, I have to give you a warning that all investing carries risks and the value of your investments can go down as well as up. Now, with all of that out of the way, there are a whole bunch of things you should think about when you're picking an investment platform. So when we're thinking about fees and charges, make sure you check any platform fees that are out there. So check for annual or monthly account management fees. See how they're paid. So some will take it directly from investments, some from cash, some give you options, some will take it via direct debit from your bank account. Now, some platforms like InvestEngine don't actually charge a platform fee at all. Others charge a percentage-based charge, which is based on the value of your portfolio, and they tend to be better for people with small amounts invested. Some have a minimum monthly fee, and some charge a flat fee each month, which tend to be better for people with very large portfolios. Next, you want to look at trading fees. So look for commission-free trading if possible, if you're looking at buying and selling shares. Also look at things like currency conversion, or some platforms will actually charge you for depositing or withdrawing funds. Some platforms will charge you for switching between things as simple as unit trusts and ETFs. Some won't, so make sure you know what they are. And the charges vary quite a bit, and they will have a big impact on your portfolio value going into the future. The next thing, fund fees, if you're investing in funds. Now, they will be generally the same, whatever platform you choose. But if you're looking at a managed portfolio, for example, then they will be charged very differently between the different providers. So make sure you understand what the total fee is for picking one of those managed portfolios. Also, do check for inactivity fees. Some platforms, if you're trading, do charge a fee if you don't trade for a certain period of time. Next, moving on to investment options. Think about the type of things you want to invest in. Do you want to invest in stocks and shares, ETFs, bonds, or do you want more complex things like CFDs? You need to check the platform offers the type of investment that you want to buy. If you are thinking about investing in shares, maybe you want to buy into some of the large US tech companies whose share price is very large, but you've only got a small amount of money to invest. Make sure that the platform offers fractional shares. Not all platforms do offer fractional shares. Now, account types are also important. So if you want to invest via stocks and shares ISA, maybe a lifetime ISA, a pension, or even a general investment account, it could be a junior ISA even, then make sure the platform or app offer that particular structure. Many of them don't offer all of them. Now, the other thing you might want to look at is things like ease of use. How user-friendly is the platform and the app? Is the navigation clean? Is it easy for you to find what you want? Can you trade within it, for example? Are there educational resources and tools that you can use within the app to help you when you're investing? What about customer support? Can you get in touch with them easily? Is there a live chat facility? Is there a phone number, for example? But also do look at reviews. Now, I've mentioned that we review all of the products in this particular show, but also do look at customer reviews on Trustpilot to see what other people think about the service. So the other thing you might want to look at that is specific to your needs is the minimum investment amount. So if you only invest in small amounts, Some platforms might, for example, require you to have at least £500 before you can invest, while others allow you to invest from as little as £1. So that will influence your choices. Also, if you want interest on any cash you don't have invested on the platform, then you might want to look at that. We actually give a roundup of all of the interest rates, which we show on screen here, but also you can find links to in the notes of this show. Some of them don't pay anything, some pay quite generous amounts on uninvested cash. And also, do think about things like automated savings, like Roundup. Some people like that feature. They may be wanting the spare change from their shopping, for example, to be put into investments automatically. Some platforms allow that. Also, ethical investing is important to some people. Some platforms don't have a particularly wide range of investments that cater for people who want to invest ethically. Maybe they are concerned about the environment. Other platforms have a whole range of investments. Interactive Investor is a very good example of this. Other platforms might offer you things like social trading if you're into that. So you might want to start buying and selling shares. Some platforms offer the ability to copy others in social trading. eToro is a very good example of that. Now, before I go on to all the different scenarios, just to point out, we have analysed the different costs and produced heat maps so you can look at the different platforms we mention and the size of your portfolio and see which could be cheapest for you. We'll put links to those in the show notes so you can look at the particular cost for you. But moving on to the scenarios, the first one I'm going to pick on is the hands-off investor. He just wants a managed portfolio. So this could be somebody who just wants to have a portfolio that's diversified, aligned with their risk tolerance, and they don't want to pick investments themselves, but they might want to have access to additional services, maybe some advice if they want, or some projections of costs and returns, whatever it might be. Then one you might want to look at is Money Farm. So that actually offers a wide range of portfolios. They include ethical investment options actually as well, but they also offer a human investment consultant. They do have a minimum investment amount of £500, so it might not suit everybody. Another platform you might want to look at is Nutmeg. Now, they have been around probably one of the longest of all the so-called robo-advisors, so they do have a track record in managing money that you can look at. They offer a wider range, in fact, of managed portfolios, including some cheap fixed allocation models, which actually don't change their allocation, which is why they are cheaper. But they do have managed portfolios. They have thematic portfolios, which means they have exposure to certain themes. Maybe it's something to do with technology that you really want to invest in. They offer something that might suit you. Smart Alpha portfolios, and they have those socially responsible, ethical portfolios. They do have financial advice packages, but like Money Farm, they do have that minimum investment of £500 up front. They do reduce that for junior ISAs and lifetime ISAs. Now, one big thing people will be thinking, yeah, their managed portfolio, what's the performance like? So yes, past performance isn't an indicator of future returns, but we have analysed the performance of a wide range of managed portfolios out there, so you can look at them and see how they have done in recent history. But if you've got a large sum, so maybe you want to invest £20,000 in an ISA, do have a look at Interactive Investor as well, because they have their own managed portfolios, and because they have a fixed fee structure, so they charge a fixed fee each month, not a percentage of your money, they become better value for money the more money you have invested with them. So they are very cost effective for large portfolios. But if you want a managed service, do have a look at them if you're investing somewhere near £20,000, for example, or you might have existing portfolios that are even larger. Two others I'm going to quickly mention: Wealthify, you'll see them in some of the heat maps that we've produced, and Vanguard. I know Vanguard's a bit of a darling. They have a relatively new managed ISA proposition, but there isn't the track record which you can look at. So if that's important to you in terms of track record, then you might want to look at some of the others I've already mentioned. Scenario 2, the cost-conscious passive investor. You might be looking to build your own portfolio, principally using index tracker funds. Now, one of the apps or platforms you might want to look at is Vanguard Investor. Now, this is very low cost. It has an annual account fee of just 0.15%, which is capped at £375 a year. But there is now, unfortunately, a monthly minimum fee of £4 on the self-managed ISA and pension and the general investment account. Now, that was introduced from the end of February, and that was met with a lot of criticism, but it does have a wide range of ETFs, for example, that you can build a portfolio from. And they also have their life strategy fund range, which they're not ready-made portfolios, but they are funds that are very well diversified globally in equities and bonds, and they're very popular with the FIRE movement if you spend any time online looking at forums. Now, one of the cons of obviously investing with Vanguard investors is that you can only have Vanguard funds. And I've obviously mentioned that minimum monthly fee, which makes investing with them expensive if you have a small amount of money. They also have a minimum investment amount of £500 lump sum or £100 a month. And if you're somebody that wants a bit of strategic overlay, you want things managed for you, then Vanguard doesn't really offer that because they're mainly aimed at passive investors, and that keeps their cost very low. And their app is pretty limited. Now, alternatives, even if you like the Vanguard Life Strategy Fund range and you want to invest smaller amounts of money, then have a look at AJ Bell Doddle. So they have a low annual fee of just 0.15%. They don't have the cap like Vanguard Investor, but it's a very easy to use app. It's actually designed as an app first, so it's great for people who want to use it on their phone. They pay a decent rate of interest on uninvested cash. Now, they do also have a minimum monthly fee, but it's only £1. And the only thing I have to say, that is product specific as well. So you have multiple products, you can pay that more than once, but they are a great option because they do offer some of those life strategy funds, but other fund choices. But you can also invest in some limited range of ETFs, but also a limited range of shares too. So this is a bit of a jack of all trades in terms of investment platforms. And the last platform in this scenario I'm going to pick is Invest Engine. And that's for people who really want to build their own portfolio of ETF trackers. And this is a good choice because it has no platform fee at all on the DIY part of its service. It has a wide range of ETFs and it's a pretty simple and clean interface. It doesn't offer a lifetime ISA, so that is a drawback. So it's not suitable for everyone, and it might not be suitable for active traders, people who want to buy and sell shares, of course, because it doesn't offer them. They do have their own equivalent of the Vanguard Life Strategy Funds if you are a Vanguard fan, and they're called the Life Plans. Scenario 3 is the socially conscious investor. So you might want to invest in companies and funds that align with your values. So one app you could choose is Money Farm. They have a range of socially responsible portfolios. There is that minimum investment amount of £500. Another good option could be Wealthify. Now, they have ethical investment options, but they have a low minimum investment amount of just £1. If you want to run your own money and you have a sizable portfolio, you might want to look at Interactive Investor. So they have a wide range of options if you're an ethical investor, including that ACE list that looks at all the different funds that they consider to be ethically suitable. Now, moving on to scenario 4, the active stock trader. So you're somebody who is actively buying and selling individual stocks, maybe in the UK and internationally, and you want to access a large range of these at low fees and even fractional shares. Now, one choice could be free trade. So they do commission-free trading. They offer fractional shares and they have a stocks and shares ISA. Now, one of the drawbacks is that ISA has a fee attached to it, unlike one of the other options I'm going to come on to. And there isn't lots of research on free trade that you can use. One good thing is they don't have CFDs. So if you're somebody who doesn't want to get drawn into that world, then they don't offer it on their platform. Trading 212 is another option. So they have a very large selection of stocks and ETFs, and they offer fractional shares. They have lots of guides and tutorials on their platform. And there is no platform fee for using its ISA, unlike free trade. Now, there is no pension on Trading 212. Free trade has a pension. Trading 212 does not. So that might influence your decision. Trading 212 does offer CFDs. Now, Lightyear is another one that people might want to have a look at. You can get access to over 4,000 shares across the US, the UK, and the EU. There is free ETF trading. There is fractional shares. There's multi-currency accounts. There's low FX trading fees. That's something you need to look at if you are trading in overseas shares. And they also pay a generous amount on cash that's not invested. Again, one of the drawbacks, it doesn't have a pension. It doesn't have a junior ISA or lifetime ISA at present. And that leads me on nicely to scenario 5. You might be somebody who wants to be investing in a lifetime ISA. So you need to look at platforms that offer such a product. Now, one of the first ones you might look at is Hargreaves Lansdown. Now, it's not necessarily the cheapest out there, but it does have a good service, a robust app, and good customer support. Now, the drawback of it can be more expensive than others out there. But if you want to look at another option that can be very cost effective and a very good app to boot, then AJ Bell Doddle is a good option. So That offers a lifetime ISA. It's low cost. It's easy to use. The drawbacks are there is a limited investment choice, as I mentioned earlier, with a limited choice of funds and shares. Now that takes me on to scenario 6. So maybe you're somebody who is saving money and you want to get interest, but you're also wanting to start to invest and you want to automate that. Now, one of the ones you might want to look at is Moneybox. Now, Moneybox is an app where you can even use roundups in the shop. So you buy something in the shop, for example, and the spare change can be put into a cash ISA, for example, or even into a stocks and shares ISA. So you can start investing that small change. Now, those roundup features aren't available on all platforms. It's only a limited number that do. One drawback of Moneybox, I will say, it does have a monthly fee of £1, which can be expensive if you're only putting small amounts of money into it. It's a limited choice of investments, but I do think its cash ISA range is very good because that £1 a month fee is not charged if you use it just to save money on cash. And it does tend to have a very good cash rate on its ISA and lifetime ISA. Another option is Plum. So that's an AI-driven automatic savings app effectively. So you get a pretty good rate on savings, but there are options to invest as well. Now, the way that particular app works, that the free version of it, you have a very limited experience and you have to pay a subscription to get access to more options. So that's something you're going to have to bear in mind and whether it fits your budget. One con to it is that the primary pocket is not FSCS protected. And investing charges, again, can be expensive if you're only investing small amounts. And the final scenario is only in here for completeness. It is in no way trying to encourage people to engage with contracts for difference, so CFDs, because most people will lose money if they engage with it. So if you are really wanting to invest in CFDs, they're very high risk, you're an experienced trader, and you want a platform that can enable it, then a couple you might want to look at are Trading 212, which we've already mentioned. IG is another option. It's got a wide range of markets, extended trading hours, for example, but it doesn't pay any interest on uninvested cash, and you need to make several trades to actually benefit from the lower fees. And the other one is Plus 500. Again, wide range of CFD markets. But just to reiterate, CFDs are only for people who know what they're doing, very experienced investors. And as you will see, the FCA warnings that somewhere between 70 and maybe even more than 80% of retail investors that engage with CFDs and spread betting lose money. So there you go. There's a roundup of the best investing and trading apps in the UK right now. There was a huge amount of research that's gone into making that piece, not just from me, but from the team at Money to the Masses. So please make sure you hit that like button, but also subscribe to the channel.